The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tommy O'Brien. We do appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials down 8. You get the Nasdaq up 6. S&Ps are up 1.5. We have the gold contract down 9.70, trading at 13.29. Silver's down 9 cents at $19.73. We have platinum off $9 at $1,093. Oil market's down 53 at $44.23. You get the bond market. 10-year note is down 4 ticks, 132.03. 30-year bond is off 5 ticks, 171.10. And good old King Dollar is up 94 ticks, 97.14. The euro is at $1.10, and it is almost like we're going into summer trading now.
Yeah.
You know?
A little tame market, especially with next week being so big with some of those bigger companies and earnings. I know you're doing a workshop, but we'll talk about that later. But, big week next week.
It is a big week. And you know what has happened, Tommy and I have been talking about this, and it's hard to believe that, we're already at July 22nd. But normally Mondays and Fridays are slow.
Yeah.
But they haven't been.
Right.
It only just started this week.
There's so much news to digest that they almost couldn't be.
I know, man.
And we have had a little bit of a lull, especially compared in context. Context is important, right?
Yeah.
In the context of our environment.
Right.
This week's been a little bit of a lull.
Right.
Which says so much with the RNC going on, but that doesn't even matter in terms of what we've been dealing with on the world stage and markets.
Right.
It doesn't.
No, totally. So we had the action Tuesday, Wednesday, Thursday. I mean, good action. It looks like this thing's going to, flatten out. Bottom line, my take is that we're going to, build some cause. And there's no doubt my bear suit evidently is still hanging in that closet, man. Because there's no doubt the NASDAQ, folks, when that NASDAQ, we had volume come out of the NASDAQ on Tuesday. Bottom line, they took out, and that would be, to me, that's like about the most deviant thing the market can do, too.
Yeah.
You know what I mean?
Yeah.
But I can really see it with those equities coming out,
Yeah, right. Right,
so,
for sure.
So we'll see where this whole thing's going to, shake and bake. King Dollar is going to get interesting because that's still, it got over those highs, and it backed down yesterday, and, let's see if we just bring it up right now. And if you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You see the banner on the top of the side. You can bring up the exchange. They'll put $25,000 of paper money into your account, and you can see how these things, these defined option contracts trade. And good old King Dollar, when you get a currency that changes trend, which it's possible that that's what we have right now, that can go for a while, I mean, and it looks like on a weekly basis, we just very well might close over this $97.60. And if that's the case, guess what? You can make that run for $98.75, which doesn't sound like a lot, but in the currency market it is. Darrell Martin, what's going on?
How you doing this morning?
We're doing great, man. You ready for
awesome?
So, setting up next week is going to be pretty wild because, what we do have happening is that you got Apple, Facebook, Google, and Amazon.
Yeah, within 3 days.
Yeah.
Tuesday, Wednesday, Thursday.
And we have the G20 summit this weekend, giving us some extra volatility.
Perfect.
So the G27. So what do they do?
G20 summit.
Oh, the G20 summit. Okay.
So that's basically the biggest 20 countries in the world.
Right.
All get together and talk, and they it's not an open press conference thing, but they come out and they have conversations with the press. And
right.
One of those weekends you don't want to be holding an FX pair into the weekend, especially.
Yeah.
So
you get the wrong statement from the wrong person.
Right.
Right. Boom. Yeah. So
and that's going to move currencies and the currencies are moving the markets, folks. There's no doubt about that.
Exactly. So when that dollar moves, it moves the currencies, of course, or whatever currency happens to move at that point.
Yeah.
The one who says what, and then it's all one big spider web. One part of it, the rest of it's going to move also, and that includes indices and commodities and everything else.
Yeah. So. Sunday night, 6 o'clock. Here we come.
That's right. The action begins.
Oh man, I'm telling you. Okay, so let's go over to the gold market and look at the gold market. Gold market out here now. This is going to be really wild watching this thing shake out, folks, and this is why. So we're down $7.90, $8, right? Not a big deal. I mean, this is a slow rollover. But what you had happen yesterday was this. We got down to 1310. And as we got down to 1310, what happened is that we had volume come out of this contract of 253,000 contracts. It's like, okay, man, you know, you're talking about, this is a complex, technically, it's a complex ABC structure on the way down. You know, you get, and now we get, explain that? Yeah, a complex ABC would be that you break below a B point, and this is close, actually, so it's 264, 253. Okay, so.
I don't know, okay. Well, I lost you there even with the 253. Go ahead. Good.
On July 14th, what you did is that you did 264,000 contracts. You got to a price point of 1320.
Okay.
Last night we did 253, so it didn't break it with a B, with volume. You needed 10 more thousand contracts. So
I just question but it broke at the bar before that actually.
It did.
Okay.
It did, and then that didn't hold either. That was 225,000. You had a lower low with 253,000. This morning, you tried to get over the 1334. We got right to it, and it failed. So that looks to me, it's technically not an ABC down that I do, but that looks to me that you got to a lower low. So first, we're at least going to test the 1310 because it's a high volume low.
Okay.
You stay right there, folks. Tommy, Darrell, myself, we're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tom O'Brien, Darrell Martin, Tommy O'Brien. We're talking about the gold contract. So we're going to go through this so you can see this correlation. So there's two different things happening inside this contract. What we did yesterday is that we got to a lower low, and you had an expansion with volume. So we have 253,000 contracts. When that happens, most times you're going to come down and test that out. And I expect that's what you're going to have. Now, I was talking about an ABC structure on the way down. So we only had 253,000 contracts versus 264. So it's not an ABC down, okay? But let's say that it got enough contract value, if it had 10 more thousand. So I want to explain what a complex ABC is. Now, this is up or down. And what happens is this, is that your first leg down or up, you get a straight line move. So we get the straight line move. Then what ends up happening, the B to C is always a choppy move. It normally goes all over the place. Now this one here just went straight across. A complex one is that first you would take out your B point, and you take it out with volume. Then what ends up happening is that it fails. It goes, so in this case, you know, you get below the 1320, which we did yesterday. Then you get back above the B point, which is the 1320. Now, as you get back above the B point, you would get back, in order to have a complex one, what would happen is this, is that you get back above the B point and you'd have to have lighter volume.
Okay.
Okay.
I just got stuck. We didn't take it out with volume, though.
I understand that.
Okay.
I understand.
You said you take it out with volume, but we didn't. Okay.
I understand that.
Okay.
So you get back above it, and you get back above it with lighter volume. Then, whether it's sometimes it's 1 day, sometimes 2 or 3, 4 days. Then it comes right back at that B point again. Volume expands again, and that's a complex ABC down. So that's on the way down. On the way up, what it would be is this, is that you're moving all the way up, you get the A to B in place, you pull back, it comes over the B point, has the volume, then it fails. It comes back inside the B point. And if you come back inside that B point again with lighter volume, your probability goes much higher that you're going to go right back topside again.
So just to tie back to this one, so is this an ABC or not?
No, it's not, because we had 10,000 less contracts.
Okay.
Right.
That's what I thought.
Right,
okay.
right. Let's go to Chris in Clearwater. Hey, Chris, what's going on?
Hey, guys.
How you doing, man?
Good, how are you?
Good.
Just looking at CMG.
CMG. Let's take a look at it. The low's 384, the high's 758. It's up $10.
We're looking at Chipotle, of course.
Yeah. So what are we doing?
Well, this hasn't got me puzzled.
Why does it have you puzzled?
Well, I was expecting it to fall apart, just because of how bad they've been doing, and then I've heard that it's heavily shorted. So I'm looking for, you know, what would typical volume of short covering be to really drive this up?
Okay, so the percentage of short positions is 15%. You know, this little baby, as we're talking about ABCs, this is an ABC up. And if you want to see something that's pretty cool, actually, yesterday this was pushing into the swing point with volume. Mm-hmm. You know, we did yesterday. I did 2.1 million shares, and it was pushing right into that swing point that had 1.4 million. Now it's taken that out, and it's going to have the volume.
Did they come out with their numbers last night?
Yeah, they did. They did.
Yeah. And what was happening is, you know, after hours, it was just, you know, kind of getting hammered. And then, you know, like I get in this morning, I open up, you know, my charts, and all of a sudden it's up, you know, it's all over the place, you know.
Yeah.
And it's a big money stock, so I was kind of confused with if this is just a little short covering rally before it moved down, but it just seems pretty convincing that it's going to get back up into the 450 range.
You know, one thing I heard yesterday, Chris, just from a fundamental, and I think I was listening to like CNBC on my way home on Sirius or something, and they were saying Jack in the Box from it took them 2 years to do a full reboot, and people died from that.
That's right.
And so
I
when you
remember
put that in
man.
perspective, and Chipotle's now, I think they were like, this is like 8 months or 9 months into. And so when you look at that time frame, that just to me, and not even thinking of this, I was like, wow, that is amazing. When you say Jack in the Box, that was so big, people were dying, and within 2 years it was gone. And so wow, like Chipotle might be back before we know it.
With Chipotle, every time I go there, it's always full. There's always
and I love Chipotle too, and I haven't been there in a while. We talked about it when it was going on.
Yeah.
But it's kind of to the point where you wouldn't really think about it probably at this point if you walked into the restaurant. I probably wouldn't.
Yeah.
We're at that cusp at least. And, when I think about that Jack in the Box, that was just like, wow, within 2 years, the stock had come right back. And I think Chipotle is in a much better spot, a much better company, and the harm wasn't done as much as Jack in the Box.
Yeah.
So just from a fundamental, and that's like 2 years out, but I would keep that in mind if you're going to short it, being down off those levels.
Well, I'm long it right now, but I just was kind of stressing about my long position.
Right.
Well, you get an ABC up now with the price projection of 438. That's what you have happening now.
Perfect.
What you can also do is, you see the last time. Are you watching Tiger TV by any chance?
Yeah.
Cool, man. Okay. So you see on April 27th how that volume sticks out? You had 3.8 million shares. So when I look at charts like that, it's like, okay, that's the last time that monster selling was done. And when you look at either downdrafts or updrafts, you normally see that, okay? Now, when you come off the bottom, what happens most times, it likes to go back to the beginning of that, right? Now, the cool thing is that you can see where this happened. The beginning of that the end of that downdraft is $415. The top of it's $430. Well, then what I do is, oh, hey, this is pretty cool because you have an ABC structure up for 438. So you're blowing through that number. So then you can make the case that, guess what? You can make the case of what you just said there, that you think you might hit the 450 because the next swing point is 450 or 467. Do you know what I mean? It's like, okay. And then if we bring this back further and just put it on a weekly, you're going to see that, guess what? That's, it's inside the range again, and that can be a dead cat bounce, but a stock that just went from $770 to $400 can bounce to $500 in a heartbeat.
I'll take it.
And I agree with what you're saying. It's always full, man. And I bet that's just going to come back. I haven't been to one in a while, though. I haven't. Said I almost consider it not a health food. It's almost a splurge for me because they're just so big, those burritos, and I love them. And they're good organic food, but in terms of like a light meal, that's not right.
I call them the 5-pound burrito.
Right, exactly,
really?
Man. Oh yeah, totally. But
hey, I want to thank you guys. Back in May, I think it was. I was listening to you in the afternoon, and you were talking, about the earnings coming out. Fossil was coming out that evening with numbers. So you're like, yeah, they're going to get blown apart. I bought the $40 puts, and I went to town on Fossil. Ooh. And I want to thank you guys. I owe you guys a dinner or something.
Nice. Good for you, man. Look at that, man. That's a trip, man. And folks, it went from $40 and opened the next day at $26. Oh my God, that's sick. Good for you.
My account was way up that day.
Yeah, well, you know what? We all need a few trades like that, right?
Yeah, yep. They only come along every so often.
They do, and I'm glad you got it, man. It's a beautiful thing.
Thanks so much, Chris.
Have a great one, man. Have a safe one. What a beauty that is.
That's a good one, man.
I hope it was on Friday, too, going to the weekend.
Who knows? We'll see. Those earnings, we talk about them next week. We'll see what happens.
We get action, baby! You stay right there. Tommy, Dow, myself, we're coming right back, folks. Dow Industrials right now are down 7, Nasdaq's up 9, S&Ps are up 3. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow right now down 5. You get the NASDAQ up 6. S&Ps are up 2.5. If you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You're going to be able to test drive that platform. They'll put $25,000 of paper money into your account. You know, Darrell, yesterday on Wednesdays and Thursdays, we like trading that oil number and the gas number, right?
Right.
And it was pretty cool yesterday. You know, we had a couple, well, one particular tiger inside the den. Now, I didn't take this trade because I've never done this trade before, but it was pretty cool. It was a binary. It was a binary to 11 o'clock in the gas contract, right?
Okay.
And
Yeah.
one side was 20 cents, and one side was 15 cents.
Yeah, like $20 or $15.
Right.
Dollars there.
And
So he was doing a strangle, I think, Darrell, is what you call it, right? Where he's buying the binary, you know, out of the money above the market, selling it below, and looking for a pop of, you know, 4 cents about in the natural gas, and we're going to pull it up as well, right ahead of those news. And I think natural gas was trading, I want to say, at, let's see,
it was I have it.
It was
right.
266. That's what it was. 266 it was trading at, and it was 269 and 262.
Yeah, he had the 269 and the 262.
Yeah, and it got a nice pop up to above 269. He
Yeah.
closed out some of his trades. He was trading more. What was interesting, though, is I was keeping my eye on it, and I think it actually closed at 11 a.m. below that 269 level.
Yeah, and because he took the money off at 80 cents, at $80.
Yeah, and that's when it traded to about 270, maybe 271.
And then he went into the 267.
Yeah, that was a separate trade.
Yeah, that was a separate trade. But that was pretty cool. So now, I think you've done some of those, right?
Oh yeah, I love trading the natural gas and oil inventory reports.
And
So and I actually prefer the binaries on them usually, just to get
that's
a
what
little
he
bit of
was
price.
doing. Yeah, right.
Yeah.
Right.
You usually got to enter like minutes before the report.
Yeah, no, that's what he did.
yeah.
Yes.
Yep.
Okay.
So 5 to 10 minutes before the report, and you hop in and you need to set your take profits.
And that's what he did, yeah.
Because if you hold on to them, I mean, you could go greatly in your favor and just reverse like in a heartbeat because it's so fast.
Yeah.
And no, but it's a simple trade, and it's every week, so you really can see what the average move is during that announcement. Good, bad, ugly, whatever it is. Like, what's the average move? And so that's what I do is I actually look over the last basically 3 months.
Yes.
And I go, how much is it moving on average during? And I'll take out the the really big moves and the really small moves, and just your sort of like your middle 70%.
Yeah.
And your one deviation move there. And I'll basically say how far is it moving, within an hour after the release. And I looked that up, and that's how I actually use that for trading the inventory releases that happen pretty much every week.
Which is pretty cool. No, I know.
Totally.
I know.
Totally.
And it's a cool trade. You can sit there and do it if you know what you're looking for. You could be at work, and you could sit down and put this trade in on the iPhone app or whatever, and set your take profits and then sit back and let it do its thing.
Defined risk, you're covered.
Right.
You just let it go. Right.
Yeah.
Yeah.
So the
It's
key
every week. So
and the key is doing it whether it's 5 minutes before the release, and then put the sell targets in at simultaneously.
Sure.
Exactly. So as soon as you get your orders filled on both sides, or whatever or if you're targeting a certain price, you can also go that way as well. And I usually strangle them, but whether you're doing both sides or you're buying 2 out of the money contracts, one above, one below, or you're just doing directional, before that release comes out, set your take profit, and then just sit back. That's the best thing you can do on it. I've found when I try to interfere, I usually mess it up. So
what's really intriguing about that is that you're playing the volatility, right?
Yeah, totally.
Yeah.
No direction. Yeah. No direction in that trade.
And that's what big option players do. They either sell or buy volatility, right? The CME, that's what the CME is all about. Do you know what I mean? They want to be delta neutral, and statistically on a longer term basis, they're looking at either buying it when it's low or selling when it's high, and covering the other side of it. So.
And one of the things you bring up, volatility, the implied volatility doesn't have as much as an impact if you hop in like 5 or 10 minutes before.
Okay.
And you set your take profit. If you set on it, then the implied volatility can have more of an impact. Because after the movement's happened.
Yes.
And then things calm down, and it's like,
crushed.
okay. Yeah, and that's the big thing, like on just earnings right now.
Right.
A lot of people don't know about implied volatility and how that impacts things. And, options become more expensive. Before Google comes out, the options are getting more and more and more and more and more expensive, and there's only a short window after that announcement comes out before the implied volatility drops and the option gets really cheap. And you can lose and be right about direction. So you want to have that take profit set, or you're going to get crushed by implied volatility.
Yeah, you're going to pay a premium, right, to hold that option for a stock with little defined risk as earnings are about to break. That's what you're paying for, to put it in layman's terms. It's like you're paying for that option, and it is an option to hold the stock with little defined risk most of the time if you're playing one of those earnings maybe. So of course you're going to end up paying that premium for sure.
Let me tell you something. In 94 or 95, I'll never forget it, right? I was so right. We were trading OEX options, right? And I was so right in the move, right? And got the move, didn't make any money, and I'm looking up saying to myself, what's wrong? What's the market doing to me? Sure. Well, guess what? I paid a fortune in option premium, not even understanding it, right? Isn't it like?
Yeah.
And I remember, do you remember Peter Richards?
I don't.
Okay. He was another tall guy in my office, and we're both screaming and yelling like, I can't believe it. We were right. Yeah, we were right, all right. And we didn't even understand options, man. It was, we had paid up in a big way. So bottom line is that was a very quick lesson. We didn't lose money, but it was like the market was down like 20, the OEX, and we didn't make a dime. It was like, what happened here?
Yeah.
But that's exactly what happened. That it was priced in, and we paid way too much.
Sure.
So.
And here's an example for you too, for our listeners out there that are watching on Tiger TV or go back and look at the recording.
Yeah.
I have Google up right now.
Okay. Yeah.
And the little circles you see, you don't have to worry about reading the numbers. The little circles you see, those are earnings. Okay. So up here at the top, on the top of the chart.
Okay.
And down here is implied volatility being plotted on Google Options.
Look at that.
On the Thinkorswim platform here. And so you can see earnings come out, and the price went massively up, okay, on that particular release here a year ago. And, the one from last summer. And, that's October, but whatever. Anyway, so it went massively up, and you can see, look at implied volatility, how much it dropped.
Yeah.
The day after that. And that's with the market going down. It flew up, and then the market flew down, and it dropped. And you can go to each one of these, and you'll notice how implied volatility drops. You go here again, see this massive crush.
Yeah.
And notice as we've been going into earnings, implied volatility has been edging its way up. And after earnings comes out next week, we're going to watch it drop right on back down again. So that's visually, you can actually see implied volatility. If you look at the vega of an option, it'll say it'll impact the option price by X amount. And so say that's 10 cents or whatever for every point, 01.
Yep.
Then if it drops down from, 40 to 20, then you got, 20 move to, that could be $2 off your option in literally a matter of seconds after that implied volatility crush goes into effect. So
you want to apply similar things, when you're trading Nadex.
Yes.
Exactly. Whether you're trading those index options, no matter what you're trading, be aware that everything is priced into what you're trading. And that's a perfect example to see those charts as they drop off.
Yeah. You stay right there, folks. Darrell, Tommy, myself, we're coming right back. Dow right now is up. Dow's down 4, Nasdaq's up 10, S&Ps are up 3.5. We have gold down $8, silver's off 7 cents. 10 years down 6 ticks, 30's off 6 ticks. King dollar up 149 ticks. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is off 6. You get the Nasdaq up 11. S&Ps are up 350. And coming up, next Thursday night?
We're talking about earnings, right?
We're talking
it's
about
the topic of the week, weekend, next week, all the above.
It will be the topic of our show Monday, the Bull Bear
Tuesday, Wednesday.
Yeah. I know. Well, on Monday, it's.
Oh yeah, no,
I mean,
you can get set up for
the
a lot
weekly
of
binary options, right?
Sure.
But coming up next Thursday night, folks. Okay, the earnings are out now. What's next? What's the next trade? I'm going to be doing a webinar. It's going to be from 6 to 7 o'clock at night. And bottom line is that we're going to be talking about quite a bit out here. We're going to be talking about.
So this is for your Market Insight subscribers. Just put it for your daily newsletter. People can go over, sign up, get a 30-day trial. Sometimes we add a book offer. We're going to do that for the next week, so they can get a copy of your book. Market Insight subscribers always get the Tiger's Den. You can be in the Tiger's Den. We're always chatting with them when we're doing our show. And of course, the biggest part, really, daily newsletter is great, but you're going to get next Thursday night talking about, those 4 companies: Apple on the 26th, Facebook 27th, Amazon, Google 28th, and then you'll close it out the night of the 28th.
And what it's going to be, folks. So picture. So we're going to do it Thursday night, and all that means we already have all those numbers. Okay, so. The correlation, if you've been listening, we got the S&P and a small ABC up, the Nadex and a larger one. So what I'm expecting is that, you're going to fruition, that news is going to be out. So then it's going to be like, okay, how is the dollar going to affect the oil and the metal market? How are interest rates going to affect the housing market? Is Brexit going to have any effect on our markets? Because that's a wild card, too.
Yeah.
And then, it's like, okay, if you're in this market, what type of option strategy can you set up to either take advantage of it or protect yourself? And I think that one of the big deals, and I'm going right back to the dollar and interest rates, that is moving markets.
And maybe we'll see a little spike in that, spike down in that implied volatility, right? And so maybe talk about options, all that stuff.
Exactly. So if you'd like to come over and check it out, folks. Guess what? You sign up for Market Insights.
Yeah. And normally we stretch out a little bit longer. I mean, it's already Friday. It's next Thursday. Right. 6 days. We get the weekend, so we'll be back Monday, and you'll be doing that course in like 72 hours.
Because the market don't wait. That's the bottom line.
It is.
Do you know what I mean? And what's really cool, what I like about this here is that you have these big companies coming out, and it's the end of the month. It's window dressing. It's all of the above.
And we're at highs, right? The whole deal. Yeah.
Exactly. So. Check it out on the front page of TFNN over the weekend. You can sign up for it.
There's no reason to wait till Thursday. Sign up right now. You get Monday's newsletter. You can see the archives. You get the newsletter Monday, Tuesday, Wednesday, Thursday. There's no reason to wait. I would encourage people, if you're going to sign up right now. And that way you start your 30 days right now. You get the whole access for sure.
Totally.
All right.
Markets out here, which is pretty cool. This is the deviance in the marketplace right now. Like if we go over to the NASDAQ for a second, NQ, and this is like just a melt up. Do you know what I mean? It's like, man, market sits there, doesn't do anything for a bit, then crawls up at 3 or 4 more points, crawls up 3 or 4 more points. Do you know what I'm saying? And that's what it seems to be doing. And I don't see any explosive moves out here today, but that's what I see happening as we're coming into the close out here. So, Darrell, what's going to be interesting here is that meeting that you're talking about, because what has happened is that the moves in the yen, the moves in the dollar seem to push these markets around quite a bit. Do you know what I mean?
Exactly.
The correlation for the yen has to do a lot has to do with that metals market. And I don't quite know why, but where that yen moves, that can freak metals out in about 2 seconds for some reason. And what I saw this morning, Tom, is let me see if I can pull up a bond. What they were talking about, which totally makes sense anyway, is that the Japanese into the bond market in an incredible way, but it would totally make sense, because imagine if we have a bank in Japan, you're in negative rates in a huge way. Here it is right here. Of course you're going to be, you're paying, they're paying you. Of course you're going to go over and spend it. Okay, Japanese investors rush into foreign debt for the second week. Government figures showed benchmark treasury yields held 0.25%. Fund managers in the Asian nation, look at this. Okay, fund managers in the Asian nation bought a net $16.2 billion in medium and long-term debt abroad in the 7 days ended July 15th. The Ministry of Finance said that brought a record 2.5 trillion yen.
You're going back and forth.
Yeah, I know. That's what the market. That's what it's saying.
Okay.
But I can of debt in the previous week. So 2.5 trillion would be approximately, let's see, 1.7 is 16.
24 billion.
Okay, 24 billion. Based on data, go back. And it's showing, this article saying treasuries are their favorite assets. Why wouldn't it be?
Right.
You know, I mean, we've been talking about this trade, folks, okay? This is like a, you know, Japanese investors have two reasons to buy U.S. notes and bonds. 10-year treasuries yield 5.7%.
1.57%.
1.57% versus a minus 0.225%. It's pretty intense. What a trade that is, man. Same duration yield, folks, 10 years. So versus, isn't that wild, man? So when we look at that, it's like, how can rates ever go up? I mean, I know that they will at some point, but when you look at that, it's like, okay, that tsunami has to stop because that demand is incredible.
Yeah.
Because what also happens, which is not, you know, it might be in this article later, but what happens is that their central bank continues to buy not only their own debt, it buys Toyota debt, it buys what other Japanese company, every single Japanese company, they buy all their debt.
Yeah.
Wouldn't it be great? Let's start a company, put the bonds out, they buy all our debt and just put more bonds out and then go to the United States and invest it.
Sure.
Pretty amazing. It really is.
Yeah.
Negative rates is crazy.
Listen.
That's what makes the whole conversation, right?
Yeah, I mean, it's not just the 1.7, it's the negative too.
Right.
You know, going on over there. That's, I mean, you got to love that for our volatility, though, man. They keep messing with everything. It just keeps moving everything.
There's no doubt, man. I mean, you know, there's no doubt. You know, as in business school right now, I wonder how they're teaching this. You know what I mean?
Sure.
Teaching the safety of bonds. Yeah.
Well, it's got to be really hard because
it's like the new carry trade. You know, I mean, it's borrow those bonds and buy these bonds, and yeah.
Yeah, that's a beautiful trade. That's a you know, it's a defined. You talk about defined.
Well, you discount the currencies. I think that.
Yeah,
that's right. Mean, it's not defined because you're playing with currencies there. Just
you are.
Put it.
You are.
So
right.
That's where you open yourself up making
trade.
Those types of trades.
Yeah.
Right. Yeah.
Because
oh no, for sure.
Yeah.
For
you're
sure.
taking in Japanese money, right? You're taking in yen.
You're taking in yen.
And
you're putting it into U.S. dollars, and that's
you're getting paid in U.S. dollars, but then you're going to owe in yen.
Right. That's
all
right.
All that's going to come to fruition.
It is.
I mean, we've talked about how that can go really, really bad.
Yeah. No. That's a fact. Because what does happen, like this push right now in the dollar.
Right.
Well, guess what? You need dollars to buy bonds. You need dollars to buy the market. And you know that's a push into the marketplace. You stay right there, folks. Darrell, Tom, and myself will come right back. And, of course, don't forget, we got our man, Mr. Basil Chapman, coming up next at 11 o'clock. Swim lessons at 12. Steve Rhodes at 1. Dave White at 2. I'm coming back at 3. Stay right there. We'll come right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. So, on that, the yen dollar. So, if in fact, you get the same duration, the 10-year duration, right?
For the trade we're talking about.
For the trade we're talking
about. If you were going to actually be, let's say, a Japanese bank, right? You're borrowing yen.
Yep.
And then
putting into dollars. So
then you'd be receiving dollar payouts.
Yes.
Right. And then you'd owe yen payouts.
Right.
So guess where you get into trouble, right? Is that what you're getting paid in gets weak.
Right.
Which you're getting paid in dollars.
Right.
You might be getting 2%, but not if that dollar becomes worthless. I mean, it's not going to. You exaggerate the situation so people understand it, right? So when you're getting paid in dollars, which is what you're investing for your 2%,
yes,
that's where the trouble comes in.
Right.
If the U.S. dollar gets weak, and then and if the yen gets strong, but you're saying right now the reverse is happening.
You're right.
It is.
No, it is. And the thing that has happened though is that the Japanese government wants the yen to get weak, but the yen really hasn't been cooperating. It has been lately, but the yen is off the bottom like from a few years ago. Do you know what I mean? And so that's one of the problems inside the whole structure of Japan right now. So if we put this up just to see this correlation, because it is pretty wild. The last 6 months we can see the yen's got weaker, right? But when this is going up now, that means the yen's getting stronger. Okay, so if you're watching Tiger TV, so if we bring this back a bit, you're going to see that the yen had a heck of a run from 2011. It was 76. It gets up to 124, and pulls back to 99. So that is intriguing, man. Over the course of time of how that trade can work out.
I think the way I look at it,
used to be a lot more attractive when you got a lot higher interest rates. But
right.
Yeah,
it's a small margin.
But it's an interesting carry trade just to look at with the negative yield.
Right.
Like I said, what's making it interesting.
Yeah.
Yeah. And what does happen, which is pretty cool, is that that's a trade when you're talking about treasuries. They're so liquid, both in Japan and the United States. That's a trade that you don't have to keep on forever.
Yeah.
Yeah. Which is pretty wild, right?
Yeah.
But it's also a trade that you can wake up in the morning like Solomon Brothers woke up in the morning like, let's see, what year was that? That was 1998. That's when, it was long-term capital. That's when they woke up in the morning and the whole Russian implosion and all that. They woke up in the morning and they were the biggest leverages of bonds and almost brought down the system. So the leverage inside the bond market is pretty amazing. You know what I mean?
Yeah.
Because even us, what happens, folks, is that if you want to see something that's really wild, just if you've never traded treasuries, That 30-year Treasury right now, let me see what the margin is. You just crack up. So you're putting up $4,100 to leverage $171,000.
Yeah.
That's just you and me. That's not even a portfolio leverage.
Yeah.
It's pretty amazing, man.
Yeah, and that's for $1,000 per point.
Yeah.
Which are just
right.
Yeah.
Right. Which lately they're moving that, moving half of that every day, just about,
So or sometimes in a day, right?
Yeah. Right. Pretty wild, man.
Yeah.
You stay right there, folks. Coming up next, we got Mr. Basil Chapman. Then we go into Think and Swim headquarters, and of course, that's going to be always when earnings are up. It's always a great show.
I'm sure they'll be talking about next week.
Yeah, no doubt.
You got to be talking. If you're talking options and you're doing a show on Friday, they're going to be getting ready for next week for sure. And
don't forget, we're going to be coming back at 10 o'clock Monday morning. We're going to be talking the Nadex options because. Volatility in spades, sure. Exactly. Darrell, have a great weekend, safe weekend. Tom,
sounds
thanks.
good, man. You too. You have a great one.
You folks
thanks,
stay
Darrell.
right there. Okay, have a great one, folks. Have a safe one. And this market just wants to go higher. Free money, honey.
That's it.
Have a great one, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.